Do you want to
Recording is on.
Cool.
Welcome to DXgov governance discussion for Wednesday, February 22nd, 1600 UTC. Look at the agenda first. Yeah, so as normal, we'll go over the proposal roundup first, and then we have discussion items. Just want to kind of get a quick temp check on some thoughts on rep syncs and guilds, and maybe some call to attention on those. And then we have a presentation from Avantgarde on DXdao Treasury. So starting first with the proposal roundup, there's a couple ones on mainnet here. You can see the three ones. The first one is a redemption balancer proposal, number 2 from Duty. So Duty is actually, you can see it's the number 2. So you've done one previously. This is 180 DXD and posted on DAO Talk here in terms of confirming the amounts and there. And Caney Fork voted for this one, I think yesterday there. So that's set to pass in a day and a half. And just kind of an interesting thing to note in terms of who is doing this and how did this entity kind of get DXD. You can see that they've basically been buying DXD as it's below and it dips below the 70% as it on chain when people are selling it, and then later kind of depositing it into this redemption balancer program here. So you can see this 180 DXD was basically acquired over 10, 12 days before depositing it into DXdao and then submitting the proposal for that. So it's like kind of a way of incentivizing the market to work with the price floor guarantee and enforce that. So as I said, you can see the Duty is kind of doing it again here in the last couple of days. So kind of turning into a little bit of a market maker for DXdao there. So that one, yeah, is set to pass in a day and a half. There are 2 other proposals on the funding and voting power scheme. Right now, this is DXgov funding new scheme redo. As some of you know, we deregistered a scheme about a week and a half ago. This was the very common funding and voting power scheme. And this scheme, this is related to the exploit regarding allowing multiple redeems through a single proposal. So we deregistered that proposal, and there were some proposals that actually had passed but had not been executed, meaning they hadn't been paid out. And it turns out when you deregister those proposals, you remove the ability to redeem anything from those schemes themselves. So this was a proposal that had gotten passed previously on the old scheme, but was never executed, and someone didn't pay the gas to execute it. So now those funds can't actually be paid out. And so this is a redo of that. Doesn't have any votes yet. I talked to Ross about this, and he said the transaction would revert if you did so, but I just maybe want to a little bit investigate that myself. But I don't know if anyone has any thoughts on the scheme reverting there. But as long as you can confirm that, then I think this one's good to vote on as well. Cool, and then we have a D-Labs rep mint for November and December for 3155 DXD. We will talk a little bit about rep syncs in a little bit. It's always good to see the mainnet ones here, and these are from previously passed mainnet proposals. And yeah, we'll see. We've got 3.86 to see. It's no longer the limit though, because now it's 3.99 because rep will be minted by the time you're there. But yeah, so just a reminder, of course, DXdao has a social enforcement of a 4% max rep. So when you earn rep, you can't earn more than that, or likely won't be voted up. So those are those 3 there on the new funding and voting power scheme. And then just looking at the multi-call scheme. So these are a couple different cow swap orders also for the new token DXD model. So these, this would submit a 200 WETH order on cow swap for DXD at the 0.4629 WETH DXD price. This is the one that is the latest calculation for 70% of Treasury NAV. This was submitted by Caney Fork, but this should be hopefully identical to the one that just passed yesterday that D-Labs and Dave have been doing there. And that was, I think, a pretty successful, see if we can look at that. I think that was a pretty successful trade. You can see that here. So this is, it was a 400 WETH order, I think at 0.457 or 0.5, maybe 0.46. And yeah, that was eaten up in these chunks here, and it just goes right back to DXdao. And the way that it works, right, is the first call is approving a certain amount. So in this case, 200 WETH. And then the second call is actually signing this specific order. So this order was already created right here. And it's filling, yeah, so it would be signing this order. This is from DXdao here. And so that's what this proposal is. And then there was another proposal submitted yesterday, actually two. One is identical to the previous one, except for it's a slightly different price. This is in line with the latest calculation for 70% of Treasury NAV, but it's the same design there. And then this other proposal was me trying to get a little cute with this, but I don't think it's going to work out as I intended. We were chatting with Dave. So the way that DXdao now interacts with CowSwap is it's a liquidity, it's like a liquidity role or like a buyer. I'm not sure how they have it. They have different like actors in the ecosystem. So right now, DXdao basically can only place limit orders that are partially fillable. So that's good because that's why we can do this big one for 200 WETH, and then that will sit on there and anyone can kind of come in there and fill it. Of course, you do have to actually place a limit order for that. But the problem with that is that those orders don't tap into the existing on-chain liquidity. So when these trades were going right here, like this is the first one for 49, 50 DXD that DXdao acquired at whatever 0.457 WETH, that could have been acquired probably at 0.43 WETH or 0.44 WETH, because that's actually what was trading on chain at the time. But DXdao, when it places these limit orders through these liquidity orders through CowSwap, it doesn't tap into the existing on-chain liquidity. So that's what I was trying to do with this proposal, was to tap into the on-chain liquidity by first doing like a smaller USD one. And I was thinking it would be a sell liquidity order, but as Dave informed me when we were chatting next week, it's actually no longer, because DXdao switched roles in the CowSwap protocol, it cannot do the normal market execution orders that are fill or kill. So this will not tap the on-chain liquidity, but it will be an order for LUSD for DXD, and it would be available on Cow protocol then. So yeah, I think we can figure out whether this should be downstaked or voted up. I think Dave and I were talking that should probably still go, because it's good to have some dollar stablecoin orders on CowSwap here. But anyway, I don't know if there's any questions or thoughts on that, a little in the weeds. Cool. And then switching over to Gnosis chain, less and less proposals here, of course, is like worker proposals are not here. Oh, I thought I executed these, but I need to. So we have these two orders so three proposals here. These ETH DXD liquidity send WETH and the ETH DXD liquidity send DXD are part of the desire to provision liquidity on Swapper and DXD WETH. So you need to have funding proposals that actually, what they do here is they send the WETH to the Swapper relayer. And so that's what both of these do. This one sends WETH and the other one sends DXD, and then a separate proposal that is actually just executed, or I think just finished, would actually deposit those there. So I think I'll do this a little after the call here, but this is a small amount just to get some additional liquidity on Gnosis chain here. I think it's the pool is very small now. It's only like 35K. So these proposals would inch that up a little bit in line with what was outlined in the new DXD token model from last month or 2 months ago. Cool. And then there's another DLabs rep sync. This is something I'm also planning to do today, right? So the way that it works here is like reputation flows downstream from mainnet. So you can claim mainnet rep on Gnosis chain here. So for those of us that have done rep syncs on mainnet for the last little bit, that actually means the balance is off on Gnosis chain there. So, and especially because we're using Gnosis chain for some signaling purposes, it's good to make sure that we have tidy rep there. And then, yeah, there's another one that funding remainder here that needs to be boosted here. That's just anyone doing that transaction. And the same thing here. This is like a new proposal resubmitted because we didn't have enough WXdao in the base, only XDAI, and we're running into issue there. But here we have the WXdao there in the base, and so this proposal will, go through here. And then I think that's it for Gnosis chain. Not too much activity there. And then, the one other thing I wanted to touch on, and I don't think we actually have a live proposal, but I know, Venki, you were trying to do the swapper fee change on Arbitrum, but I don't think that is.
I mean, DXvote on Arbitrum, it doesn't load at all for me. So I'll probably try to reach out to Augusto or Ross. I have tried reaching out to Ross, and he gave me a couple of suggestions on using different RPCs, but it just 429s immediately for me. Wow, that is fast.
I'll look at this too. I've not done this a little bit. I'm just pulling it up here. It looks like I can access it on Arbitrum here, but anyway, this was a snapshot vote that passed to change the swapper fee for swapper, and then we actually just need to execute it. And the only way you can execute that on Arbitrum is through the DXdao base there, because that's the owner of the swapper fee setter contract there. So we'll need to figure out how to do that and figure out how we can make changing things on Arbitrum a little bit easier, especially if we want to use the fees on swapper in any way, because that's the only way that we can change those fees. Cool. Any other thoughts, questions, comments on any of the proposals outstanding? Cool. And then before we get to Avantgarde, I just wanted to maybe call to attention and open for questions if there's anything on doing some rep syncs. So it was nice to actually see Dave's rep syncs. And then I think I also saw Melanie do a rep sync here. So, always good hygiene to do this every 3 months, maybe every 6 months, to ensure that these things are kept up to date. So for people that have earned rep in the last couple of months, it's a very good time to do that for Mainnet. It's also not a bad idea to pair that with some other funding proposal you have, right? Or you have a reimbursement of something, you can do that all in one proposal if you're worried about gas costs. Of course, those are reimbursed at the end of the quarter there, so shouldn't be too big of a concern. But make sure you're doing your rep syncs. And also, I think as Dave had with his Gnosis chain one, it's also good to make sure you're doing your rep syncs back to Gnosis chain, because there is some signaling going on there. So that's kind of like the immediate call to attention. And then there's kind of two other medium-term things to think about. One is, from a technical level, doing multiple rep mints right now is very difficult. So that's why we have to have these single proposals that will do that. But we do have that coming with, or that capability coming with, the governance 1.5 contracts that I think are the last stages of the audit, kind of famous last words, but we'll be able to do a lot more interesting things with multiple rep mints. This is actually, I know how DXgov has been doing their rep mints on their own guild, that it's just like a single proposal that would execute a bunch of those. So that would be a good way of doing that, I think, on a medium term. So we have like a quarterly one that does that. And then the other item to think about going forward with reputation and how it's earned is, for, I guess, really it started in September 2020, probably with the passing of the second worker compensation guidelines, that this very clear 0.1667% for full-time contribution was, for any contributor, was kind of outlined. And that has really been the basis for 98% of the rep distribution since Genesis. And that's, I think, been very important in getting like more people in, kind of maintaining DXdao's decentralization. Obviously, like the 4% limit has been important to that too, and how that's socially enforced. But I think in the shift to guilds, I think there's an opportunity to rethink how reputation is distributed. And so how maybe we're not just distributing that to individuals, but also to other stakeholders, other DXD holders, specifically for doing things, being more active in reputation issuance. And I also think specifically giving reputation to guilds themselves to be able to have reputation in DXdao as a way to participate. And you could think about that as, in prior to this year, it was individual contributors who were getting paid for DXdao, therefore they were earning reputation in DXdao. But now, like with the switch to guilds, it's more like guilds are the ones that are contributing to DXdao, and maybe they should be earning reputation in DXdao. So I don't have any ideas on this kind of yet, but I think in this switch to guild, it's an opportunity to maybe rethink that. And I also think, like, very crucially, try to figure out how to expand rep distribution besides just full-time contributors, and figuring out how to bring in other stakeholders. Maybe they won't be voting all the time, but are, I think, made a lot of positive contributions. We have the Rep Boost program, but I think we could do a lot more to distribute rep more widely. So that's that. I don't know if anyone had any thoughts or comments on rep syncs and the medium-term strategy for rep issuance and distribution. Cool. All right. So next, Avantgarde. So last week we had Kaparki present their proposal draft here, and been talking with Avantgarde as well. And so we've had a couple conversations with several people, and they posted in the forum last week. And so, yeah, I want to turn it over to them. I just replied with some questions like literally 45 minutes ago, so I don't know if anyone has read them, but they're hopefully
like a basis 5 minutes ago.
Hopefully more a basis for the questions that people can follow along here and there. So, like, yeah, Mona, why don't you kind of kick us off?
Yeah, I mean, actually, we only saw the questions like 5 minutes before the call, so we haven't fully digested them. But why don't we tackle them right after?
Sure.
What I thought, I prepared a few slides. Maybe if you can, I don't know how to share screens. You have to give me access.
Yeah, like the third button there.
Okay, cool. And I wasn't sure if Aaron would be able to join us because we're hosting a webinar at the same time. So, but he was able to jump on. So I'll do the slide presentation, but then he's happy to jump on with the Q&A. Okay. So sorry, Chris, what do I have to do?
The third button, it should be mute and then camera, and then the third one should be sharing your screen.
Oh, sorry. Yeah. Okay.
We're Jitsi maximalist here.
Yeah, we used to use it, but it had a maximum number or something. I think we were too cheap to upgrade it. So, but I've forgotten how to use it. Cool. Can you guys see?
Yeah.
Okay. Awesome. Cool. So yeah, thanks for inviting us to present today. So today I'm really excited to kind of share our vision on what I think an Avantgarde-DXdao partnership could look like. And I've just got 7 slides, but basically what I wanted to cover is the investment strategy that we proposed on our proposal. I want to talk a little bit about the tech that we're proposing to use. And then I want to talk a little bit about the biz dev contributions that we'd like to make alongside the Treasury management mandate. But before I begin, I'll just tell you a little bit about ourselves. This slide is actually just the investment team at Avantgarde. So our DNA, as you might know, is in software engineering, and we're a team of 20 people. So this is really synergistic when we happen to be working with projects because we can tap into that talent. But on the investment side, it's the 3 of us. So for those of you who know me, I founded what was known as Melon Protocol back in 2016. It was the first decentralized asset management protocol on Ethereum. It's been going now, the project, for 6 years. We've been on Mainnet for 4 years. And in February 2019, we became the first protocol in DeFi, I think, history to decentralize our governance. Because of that, a few months later, I founded Avantgarde Finance, and we then decided to apply to the Enzyme DAO to become one of the core contributors to the protocol. So we have been doing that ever since. And in a past life, I managed money for Goldman for nearly a decade, and I was a fund manager for about 4 years at one of the large European hedge funds. Aaron actually heads up our asset management division, and he's just jumped onto the call. He has a strong background in Web3 engineering and DeFi. But formerly, he was also in TradFi with a strong options background. And Carlos is a senior, very experienced smart contract developer who's worked for us for several years and formerly at Consensus. But Carlos's kind of passion is actually DeFi, so we've kind of borrowed him, or not even borrowed him. We've moved him over to the investment team. So that's us. Avantgarde Finance, by background historically was purely a software development company, but last year we followed a natural evolution to become an asset management company too. And currently we're looking after about $30 million in assets under management, with our largest client being Nexus Mutual. So now you know a little bit about who we are. Let's move on to the proposed investment strategy. The idea here was that we've observed that the DAO is quite long ETH. We love that. We think this is a great level to be buying into ETH. And we really feel that the market has bottomed here. So we're proposing to actually keep a strategy that is always directionally long ETH. And the strategy would have two goals. The first would be to target a 5 to 6% yield on ETH per year. And the second would be to contribute to Ethereum security by building a carefully diversified portfolio of network validators on the staking side. So in terms of how we execute this strategy, we're proposing to do it on Enzyme. We firmly believe that this is the tool to use because it's a purpose-built asset management protocol, which is trustless, non-custodial, and transparent. And we think these values align with DXdao. But in particular, there are two really strong value propositions, which I think you get on Enzyme that you don't get anywhere else. So I'm going to focus a little bit on those two. The first is trustless investing. So the idea here, when we talk about trustless investing, it's the idea of being able to delegate management of assets to a third party without having to worry if they're going to misappropriate the assets in any form, whether that's intentional or unintentional. And from day one, Enzyme was built specifically to prevent against this kind of misappropriation of assets. And we can do this because we host a curated asset universe, environment. So what that means is the Enzyme DAO manage a list of assets and a list of DeFi protocols. And every time we integrate, for example, a DeFi protocol, the first thing our engineering team does is consider all the different ways that a manager might be able to misappropriate funds from a vault, whether that's using a flash loan attack, whether that's selling an asset to themselves at zero price, whether that's, all the different kind of various hacks we've seen in DeFi. We make a list of all of those attack vectors, and then we build protections against those. Most of those protections are typically smart contract enforced protections. We then get those audited, and then the audits are published publicly, and we typically document the various kind of attack vectors and protections in our documentation. As far as we know, this kind of trustless investing isn't possible anywhere else in DeFi on-chain asset management today, or off-chain, frankly. So we think that this is a really strong reason to consider using Enzyme. The second value proposition that we think is really unique is a concept that we like to talk about as trustless reporting. So typically when I've observed DAOs reporting on their P&L or reporting on their performance, typically the way they back it out is they trust someone to take a screenshot at the end of the month of what positions are held in a safe or a vault. Then those positions are transposed into a spreadsheet by some individual. And then we kind of typically see some light to low quality reporting, which really doesn't tell you much about the activity intra-month or any of the kind of impermanent losses or trading P&L intra-month. By contrast, what Enzyme does is we leverage all the Web3 technology we possibly can to provide trustless reporting. So you don't actually need to trust any human being to get the reports. And we can do this because Enzyme is underpinned by subgraph technology. So we have 7 graphs that underpin Enzyme, and they basically index all the data that is transacted within the vault and translate them into human readable language, which is displayed on a nice user-friendly user interface. And then we pair that data with an on-chain oracle and display that data. So it's always easily provable. And what that means is you get 24/7 reporting, and you can query at any point in time in history, what positions were held, what P&L was, what trading activity happened, what impermanent loss was, and so on and so forth. And we make this really easy to use through our interface. And a cool thing is that the interface is also white label, like we have a white label version of it. So what we do if we were to use this for DXdao would be we'd kind of white label a version of this interface specifically for the DXdao community with all the DXdao branding, etc. So cool. So we've talked about the investment strategy. We've talked about the underlying tech we'd like to use for it. And I'm happy to take questions on that afterwards. The next thing I wanted to talk about is the biz dev contributions we'd like to make. So typically when we work with DAOs, we like to leverage the fact that our DNA is actually in software engineering originally and try to look at ways where we can align interests. And when looking at the DXdao project, we identified 4 quick wins where we can contribute to the DXdao ecosystem. The first is boosting liquidity for the DXD token. So the goal here would be to boost liquidity such that we can obtain a Chainlink ready price feed. And the goal here would be that if we have a Chainlink price feed, we believe DXD will be much more composable and interoperable in the rest of the DeFi space, which will benefit the token. The second quick win is integrating Swapper into Enzyme. So the idea here would be that we'd build an integration for Swapper into Enzyme, and then we would automatically be able to open that integration, that exchange up to all Enzyme users, which would hopefully drive more volume through the Swapper exchange. The third quick win would be integrating the Davi governance contract more natively into Enzyme, such that if an on-chain vote were happening to deposit or withdraw funds from an Enzyme vault, basically if the vote was positive for the decision, that would translate into a transaction being triggered on-chain. And we'd build a simple interface to help interface with that. And the nice thing about that is we wouldn't need to have a subcommittee or a sub-guild of signers, which would remove or at least minimize any single signer liabilities that you'd need to have if you had to have a subgroup of people managing the treasury. And last but not least, we'd love to explore a DAO-to-DAO token swap between DXD and Enzyme. So obviously, we only have 1 seat on the Enzyme Council, but we're obviously close to the Enzyme Council, and we would love to help coordinate that if that's something that the DAO was interested in. We'd be able to help coordinate that, and we believe that this could help align interests between the 2 communities longer term. So yeah, that's pretty much it. I mean, I have a little summary slide, but I've said it all, so there's no point in repeating it. I know there are a lot of questions on the forum, so I don't know if people want to jump in and ask questions, or if we just go to those straight away. I'll take your lead, Chris.
Awesome. Thanks very much. Yeah, let's see if there's any initial questions here, but I, like Keenan used to do, have come prepared with other questions if there are not any right now.
I have a quick question. I was going through your blog post on, you have a link to like the, I don't know, your Avantgarde website and like the DAOs you manage. And I saw like they're mostly just holding like stake ETH or like sitting idle on like USDC. I'm like wondering what kind of like strategy you foresee for like the DXdao, or like kind of like how you manage these vaults. Is like a more active management to do, or do you kind of like take more long-term bets, or is it like dependent on the customer you work for? Just curious about that.
Yeah, it's really dependent on who we're working for and what they want. So some people want us to be much more involved, and some come with a predefined strategy and they just want us to execute it for them. But in the case of DXdao, I think what we're proposing is to build a diversified portfolio initially of 4 liquid staking positions pre-Shanghai fork, and then after that upping the number of positions to 10. But the idea would be that Erin and Carlos have been doing a lot of research on how to build a portfolio that is completely diverse, or as diversified as possible in terms of regional risk for stakers and also operational risk, because we want to be able to contribute towards the decentralization of the Ethereum network, but also be able to protect against slashing risk. So there is, I wouldn't say that it's super active, but I would say that there's a lot of research and monitoring required to be able to stay on top of that. And then additionally, we'd be trying to enhance the yield with DeFi composability where possible, but in a very risk-managed approach. We wouldn't want more than a certain amount of exposure to any one DeFi protocol in case there was a problem with that DeFi protocol. Does that answer your question?
Yeah, for sure.
Awesome, thank you.
Gusto in the chat asked about the minimum amount to be managed. How does it start with smaller funds, or maybe you see how that goes? Because I guess there wasn't anything. I guess in Kaparki's proposal, there was like, we want to manage X amount there. But
yeah, I mean, it's hard to put a fee on it when we don't know what numbers we're talking about. Like if it's it has to kind of make sense for us. We're dedicating proper resource. We plan to dedicate proper resources to this, and there's a cost involved in that. And we're basically open to discussion. It's really hard to price it until we know what kind of size mandate you guys are looking to kind of part with, in terms of management. But we're open-minded, we're flexible. We want to be, we want to be we want to do this with you guys. And I guess one way to look at it is to say, okay, for the ETH portion of the portfolio, I guess like the number I had in mind as a minimum was 10 million for this 15% performance fee. And then all the other pieces of work that we presented, whether that's like making Davi interoperable, or I think there was, I vaguely saw something on the forum about whether we could do DAO reporting in general, not just for the Treasury. We could definitely, and we could also work towards automating that as much as possible with technology. But that, yeah, there's obviously some cost involved in that, and we could just kind of do that on an individual basis so that it's fair for everyone involved.
And then another great question from Augusto, because this is a question I also asked, was talking about other networks. So
yeah,
we're obviously on mainnet, that's where most of the funds are, but about Swapper's biggest market is on Gnosis chain now. There's about $9 million of total liquidity there, and about $4.5 million of that is DXdao's. And then DXdao is also on Arbitrum. So how are you guys maybe thinking about that? And yeah, the cross-chain. I feel like cross-chain asset management too, maybe that's like the next stage.
Yeah, so it's actually a really timely question, because like we're literally just starting work towards our V5 now. And one of the big topics that we'd like to incorporate in the V5 would be this kind of idea of cross-chain interoperability. Aaron can probably speak more to that, being more technical than me, so I'll let him jump in and speak on that a bit.
Yeah, thanks, Mona. So can everyone hear me? My mic was a little wonky earlier. Okay, great. Right, so we currently have a Polygon deployment, and the way we've sort of thought about cross-chain in the past is having sort of siloed deployments on each chain. But with the proliferation of these cross-chain messaging protocols, which are capable of passing arbitrary function calls back and forth, we're kind of seeing a world where we could maintain a vault on mainnet and manage positions on various chains. So I don't want to speak for the smart contract team because it's very, very early doors in terms of our research into this. And I think like it's a complex problem to solve, but I think that we are much closer than we were a year ago to being able to actually have sort of one main vault on Ethereum and child vaults on subsequent chains that can kind of all report back up to the same P&L. So that's super exciting. We're, like I said, early stages of research into how exactly that might work. And there's, luckily there's a big Uniswap vote a couple weeks ago that's sort of made this cross-chain messaging topic top of mind for a lot of people. So we're hopefully weighing in there as well, but learning from what's happening and learning from the research that's going on there at the very least to plan out what our strategy is there. But so this is all to say that it's in process, but no final form as yet.
But that would look like a mainnet vault accessing other chains rather than deploying to other chains.
It could also look like we could just deploy an instance of Enzyme to Gnosis chain. But yeah, I mean, that's something that the council would have to approve, but it's not something that's very difficult to do. Like I said, we're already on Polygon. Or like Aaron said, we're already on Polygon, and it's.
So I think there's a world where we take both paths, but for me, I think I think it's more interesting to kind of roll all like child P&Ls up into one one vault. So which is also a harder technical problem to solve as well. So we're kind of pursuing both things at the same time. I would say
it's kind of like whether cross messaging becomes like good and adopted quick enough before like other chains like develop enough where it's like, well, I just got to be there and be on that. But yeah, it does. I think the Uniswap vote is definitely like a big maybe indicator on where things are going there. Maybe set the standard too for those.
Yeah, hopefully.
So there are a couple other questions. I'm reading from Zahu, Connor. What's your strategy for DXD redemptions and having funds available to meet them in time? What happens to performance fee if ETH amount starts above 10 million and then DXD gets redeemed to below 10 million managed? So just maybe for, I don't know if you can answer that, but I can explain maybe how the system, why don't you go at it and I can answer any questions about, you may not understand that.
Yeah, so I think I get it directionally. You can redeem DXD for Treasury value or for its value, like its current NAV, essentially.
70%, and like the DXdao like sets kind of policies on like how that 70% is calculated, right? So ETH and stablecoins are kind of at that, and so this is like just a new policy, new program that was enacted in started in December, and so basically like there's a commitment by the DAO to buy DXD at 70% of Treasury NAV.
Yeah, so I think the question is having funds available to meet them in time. We can, and this would maybe be a little bit of extra contract work, but I'm not sure the governance mechanism that you use to service those redemptions, whether it's a multi-sig or like a compound governor style
it's Davi, isn't it?
mechanism.
It's Davi.
It's our like 1.0's or 1.0 system now, right? So everything, as I said, DXdao is a little, and maybe not all of us, but a lot of us are pretty decentral maximalists here. So we don't. We could have used a multi-sig. We did not use a multi-sig. So there are two ways we enforce this now, and I think this is like kind of all part of. So the two ways we enforce this now is this thing called member balancer redemptions. And maybe I'll just share my screen here because this is basically the idea being that you can submit a proposal to redeem a certain amount of DXD once you have deposited that DXD in the Treasury. So like I think we just had one of these on the call, right? Where basically someone had been acquiring DXD below 70% for like the last like kind of couple weeks, and then was like, okay, yeah, this duty one, and then okay, I'm going to send that there and get, and then ask for the Treasury assets back. And he did that to calculate that doing this. So this is a very crude way of doing it, but I think actually enforces it. So that's the first way. And the other way we have right now is through these cow swap orders that are just accessible by anyone. So there was like a 400 ETH one that traded there. And I'd say like right now we're going in we're going through a transition because this is like a big shift in the DXD model for like a long time. And so you see a lot of action, I think, from DXD holders. And then B, we're just figuring out actually what the mechanics are for enforcing it. So I think it's kind of a good question for maybe how to build something that accomplishes a goal rather than like it's something specific for that. There.
Yeah, absolutely. So I think there's, and by the way, we're decentralization maximalists as well. I noticed you smiled when I said multi-sig, so I was glad to see that. We can control, so investing to and redeeming from an Enzyme vault is just a smart contract call, right? You're swapping whether it's underlying assets, so let's say ETH for share tokens on the deposit side, and then share tokens for ETH on the redemption side, and the amount of share tokens that you get per ETH or vice versa is determined by the share price of the vault, which all rolls up to what the vault's holding, what the value of those holdings are based on the Chainlink price feeds, et cetera. So, without having done a dive into how this redemption, the DXD redemption mechanism works, it does seem like it could be composable with the deposit and redemption flows and function calls on an Enzyme vault. So I don't think we'd have to plan sort of around liquidity requirements, because if we're staking things in validators, like we'll have to manage the withdrawal queue and that sort of thing. But I think that's more of an interesting problem to solve rather than than a stopper. And then I had one more thought on that. So I think that, sorry, go ahead.
I was going to say, because you guys have like or is there like a ability to be like, boom, it's back, it's back to the Treasury, or is there like an emergency button that, or like how would that kind of, maybe with some vaults you could kind of do that, but I feel like there's an ability to try to have something in case of massive redemption, and like how is that kind of enforced?
So there are kind of two primary safety mechanisms. One, DXdao will always own the vault. So that's basically the DAO in some capacity will have root admin access and be able to replace, for example, Avantgarde, who's a delegated trader. So DXdao could always boot Avantgarde off, or boot, sort of any asset manager off of the vault by calling functions on the vault itself. And then the second thing is that you would be the only holder of the vault tokens, and you'll always be able to redeem those for the liquid assets that are in the vault. Now, this gets a little complicated if we've deployed into validators that don't have instant liquidity. But, I think if we have like a Lido staked ETH, a Rocket Pool ETH, and a Stakewise ETH position, and then some other, validator positions, you always have access to the liquid assets in the vault. And I can walk through like exactly what a. Sorry,
Aaron, just a thought on the drop. But like if if somebody wanted to call a redemption on the DXD side, they could just get their Enzyme Vault tokens and then wait until the liquidity period had passed and then redeem for the underlying assets. So in essence, they would have custody of the assets, but they just wouldn't have the liquidity straight up.
Yeah.
And on the interoperability side, by the way, one of the reasons Nexus Mutual and Unslashed Finance chose to integrate with Enzyme is because of this whole value interpreter idea, because it does make it so the Enzyme Vault shares are composable with their protocols because of this on-chain knowledge of price.
Cool. I just want to look up a couple others. I guess this Maple question from Dave is, I guess some of these are locked. This has got to be like validators. Some would be locked up as well.
Yeah. So I think like this goes to the liquidity management question, and I think there'd have to be coordination between whether if it's Avantgarde managing the funds, there'd have to be coordination. We'd have to figure out a way to know when we need to spin down a certain amount of validators, or when you need ETH for various liquidity requirements. And I think that's just like a way of working that we'd need to iron out in terms of communication. So yeah, like we expect the validator queue to normalize somewhere, or the validator withdrawal queue to normalize somewhere between around 2 days or something like that. And I think that's because I think it'll be fairly predictable. I think it's an easy thing to manage around. There are like, we wouldn't necessarily undertake any DeFi positions that are going to get locked up. I think that in general, there's enough opportunity in liquid staking tokens and the strategies around liquid staking tokens that we don't necessarily need to send those tokens off. The primary lockup would be around the validator positions. Should I just go down the list here? I can talk about
I guess that maybe just on this one right here, because I guess what you're saying is the staked ETH vault, or kind of that, would not just be in the liquid staking derivatives, or it would be, because I guess then if it's at those have pretty.
I mean, Chris,
yeah.
If I guess like just to caveat this with like if 24/7 liquidity is a requirement for DXdao, we can build a strategy around that. That's not a problem.
Mm-hmm.
But if it's just important to be able to have custody of the assets, then and that's doable with the Enzyme Vault wrapper share, then we can devise a way around that, if you know what I mean. Our initial thought, we didn't realize the liquidity was a pre-requirement. Our initial thought was to try and get up to 10 positions after the Shanghai fork, so that we're diversifying liquidity and diversifying risk and contributing to more network security. But if you guys would prefer a 24/7 kind of redeemable strategy, we can work around that.
Yeah, I mean, give me a point and a question. I think to your point about 24/7 liquidity. So this is obviously a core governance question, right? Do you want to have instant liquidity, which means you're going to be sacrificing yield, right? And you can imagine there are certain stakeholders in the ecosystem,
and possibly security, because possibly you're concentrating risk, right? Because there's basically 4 liquid staking options, I think, available today.
Right.
And
so, but I guess just in general on the 24/7 liquidity thing, like that is a question for governance to figure out how much they want to be able to honor that versus how much is important to get some yield and that's like there will need to be some kind of agreement on that. We kind of have different things here. And then secondly, I think on the liquid staking derivatives, I guess there's like a kind of specific question. When you talked a little bit about like kind of committing to decentralization of the liquid staking, or I guess the staking market. I think that's something very near and dear to our hearts. Does that mean you would be like working with like non-liquid staking derivative places, basically like running validators yourself, or like how would that kind of be? And that's why I guess you're saying after Shanghai, because this would be when deposits are enabled or something.
Yeah, so an Enzyme Vault can hold liquid staking tokens, but we can also deposit directly to the ETH2 staking contract and run up validators through an integration with, or spin up validators through an integration with Kiln. So Kiln is basically the front end, or the sort of the vault facing contract, and then we can allocate ETH to various validator service providers. Kiln being the first one, but also Consensus, Coinbase Cloud, and their onboarding. I think they're trying to onboard 2 or 3 validator providers a month. So yeah, the portfolio, as we had it imagined, would be split between these sort of liquid staking, so Lido, Rocket Pool, Stakewise on one side of things, but also depositing directly to service providers on the other side of things.
Would presumably get a slightly higher yield because you're not, giving it to the
incrementally higher yield because fees are lower, and it's also a way to diversify operational risk, although both Stakewise or both Rocket Pool and Lido are fairly well diversified that way.
There's a question about the diligence. I thought, Aaron, if you want to do a screen share and just show an example of the diligence, just kind of run through the headlines of one example of how we do diligence on a position, for example.
Yeah. So I'll use the one that we are not going to go with. So we're building another fund at the moment and just had our first investment committee meeting last week. Sorry, let me just share the right screen here. And in service of that, the fund will be basically earning diversified ETH yield. So in service of that, we have, sorry, I lost the screen. So we have an internal investment committee meeting, or an internal investment committee for this fund in particular, but all sort of products run through a similar strategy whereby we do research into it in an individual token, where we dive deeply into the mechanisms. In the case of the liquid staking tokens, the 3 sort of headline mechanisms are: how does it ingest ETH? How does it represent yield to token holders? And then when redemptions are enabled, how can you switch them out? So we did a bunch of research into Coinbase staked ETH because it's obviously grown the quickest over the last 6 months or so, and eventually opted not to not to invest, but wrote basically write a memo to that extent, figuring out what the risks are, whether we can mitigate them, whether it's hedgeable, and then whether the opportunity is essentially worth whatever these risks are. And I'm happy to share that Coinbase memo. They may not like it, but I'm happy to share that Coinbase memo.
Maybe just give the punchline. Why did we not, why did we not go for it? Just like to give an example of our thinking.
Yeah, so we didn't go for Coinbase because it's a black box. The redemption mechanism is a black box, and the staking operation is a black box. So we don't know who the validators are, what consensus clients they're running, what environments the consensus clients are running in. And then the redemption process requires that you have a Coinbase account, submit to their terms of service. There's basically a whole portion of it that depends on their internal ledger tracking their users' deposits of, ETH2, they call it, and then making the swap out. So there's just too many things that we don't know, layered in with the regulatory risk of everything that's happening in the United States around staking derivatives at the moment. It just wasn't worth the benefits that it would bring in terms of diversification.
Maybe two questions, just because I'm reading this one from Zagu. Could DXdao, the assets, the vault shares are in its treasury, presumably it's an ERC20 token.
Mm-hmm.
It could send that to another address if it wanted?
Yes, that's configurable. So we can enable transfers, or the vault owner can enable or prohibit transfers, or you can control the addresses to which vault tokens can be sent. So there's like a whole range of configurability there.
Cool. And then another kind of specific question. So for Uniswap v3, is that, you guys integrated that on mainnet, and maybe like how have you used that in the past? I think when I think about what would be needed from a vault, I think a lot comes to rebalancing. I mean, DXgov already has like $5.5 million that's LPing on Swapper, but that's a Uniswap v2 fork. It doesn't require any management at all, and that's it's nice because it requires no management. But I'm interested in how DAOs could be using Uniswap v3 specifically on their DAO token, and so I'm kind of wondering how you guys have maybe dealt with that with vault strategies like rebalancing and things like that.
Yeah, we're fully integrated with both Uniswap v2 and v3, and you can manually manage Uniswap v3 positions in terms of tick ranges and sizes and that sort of thing. We do have in the product pipeline helper functions and helper contracts that will enable sort of position rebalance, collect fee position rebalance operations, sort of batching contract calls into single calls. That's in our product pipeline. We haven't released it yet. So currently the process is quite manual. But in theory, we could even integrate things like any of the liquidity management protocols like revert. Well, this revert's a tough one, but yeah. So there's sort of the opportunity to manage Uniswap v3 positions is quite wide. It ranges from currently manual as it is to sort of more programmatic in the future.
Yeah, definitely. And so you talked a little bit about, I guess, like I guess it's like almost like there's a network that Enzyme is operating that is not just like kind of on Ethereum. And so I guess I'm thinking about like you mentioned the subgraph, and then I guess the Chainlink oracles. But are you guys running like another bot network, or how do you kind of deal with the transactions, like everything that's kind of like working in the Enzyme system? Maybe go through what are the trust assumptions on those like other networks?
Yeah, so I
guess who pays gas fees is kind of like the question, or how
yeah. So well, gas that's also configurable. We can expense gas to the vault through gas station networks relayers, or the investment manager, the kind of asset manager can pay gas. I think the trust assumptions as it relates to the way we integrate with other protocols are, Mona touched on them a little bit in the deck, that the process by which we integrate with other protocols. So, Uniswap, for example, just because it's the last thing we talked about, like when we built our Uniswap integration, we looked at the Uniswap contracts and then built our adapters in such a way that any sort of risk vector that we saw that a manager might be able to take advantage of would be mitigated. So that would include like, spinning up their own pool and trading ETH for 100 ETH for 100 useless shitcoins. Like that's limited at the contract level. So the trust assumptions on a per network or per protocol basis are strictly limited by our adapter contracts, and those are auditable. And the audit reports do a good job of sort of laying out potential attack vectors and then mitigations.
Cool. And then maybe kind of coming up in the hour here, so if anyone else has a question, leave it in the chat, or feel free to jump in here. And as always, the forum is a great place for discussion. And yeah, go ahead.
Sorry, can I just interrupt? Ross asked an interesting question. We definitely need to improve the process and interface to make that work seamlessly, but Enzyme Vault shares should have a price, a Chainlink feed that can be used directly to calculate. And this is exactly what Nexus Mutual does. So Nexus Mutual deposited 15,000 ETH with us. That ETH was from their capital pool. So if you think about their capital pool as being this big stack of money that they look at and they say, all right, I have this amount of money, and now I can write this amount of insurance policies against it because I the risk of this insurance policy outweighs whatever. So they needed to know, when they took this 15,000 ETH and put it into an Enzyme Vault, they needed to know how much that was now worth based on the investments that they were making. So they're in this Maple pool, it earned interest, it took a default, it earned interest, etc. Chainlink has a custom price feed contract, which Nexus Mutual pings and says, how much is my vault worth? How much, like on anytime they write a new insurance policy and needs to see it, they get a price in ETH from this Chainlink feed of exactly how much the prices the vault is worth, even if the positions are sort of spread out. In their case, it's just on Maple, but even if the positions were spread out across like N liquid staking tokens and N staking positions, that Chainlink price feed, which is a custom contract, would be able to tell them exactly how much it's worth.
Cool. Here we go. That's a good one.
Yeah.
Maybe just Maple. How do you see that? And yeah.
I'm not ready to give up on the sort of on-chain, off-chain world, but ultimately it's up to the DAO. The investment mandate's kind of whatever you guys want. I think there are a lot of interesting experiments happening with real-world assets. The degree to which those experiments are interesting varies wildly, and I think that there will be some winners and some losers. But ultimately, like where your ETH is deposited is up to the will of the DAO.
Yeah, and also I would just add to that if the decision for DXdao is we don't want any CDFI protocols, we can basically put all the CDFI protocols on a disallowed list, and just use the disallowed list policy to prevent us ever being able to touch those protocols. So we didn't go into all the policies in detail, but we, aside from being able to do price checks and prevent against flash loan attacks and misappropriation of funds, we can also do things like control which assets you can trade, which assets you can't trade, which protocols you can interface with, etc. So all of these things can be decided upfront, and the vote can encompass all those policies or we can decide on all of those policies before taking anything on chain.
Cool. One last question from me, and it's kind of, you touched on fees a little bit, but I was, I guess, curious to the fee structure without getting specifics on that. And I guess in your post, it looked like there would be basically like a separate management fee for an ETH-based yield and one for a USDC based yield, maybe, and then like a DXD.
Yeah, on USD, on an USD, we're not proposing to do anything. Actually, I think the best thing the DAO can do is just hold USD, unless it has too much, and then maybe it should think about buying something with more beta. But actually, the yields on USD are so low, they're just not worth the DeFi risk you'd be taking. And on DXD, you know, we wouldn't want to bundle that up with ETH because the goals might be different than just earning return. You know, we might decide that actually the KPI we're looking at is increasing liquidity, not necessarily minimizing, you know, and maybe minimizing impermanent loss. But it doesn't make sense to bundle that up in the same vault. I'd say that that should be in a different vault, and we look at either a milestone-based fee approach for that, or a combination of fees and milestone-based. I don't know, but it just doesn't make sense to have that in the same vault and being charging for that in the same way, because it's a completely different denomination of assets, and it's a different, you know, it's not, the goal of that is not just to earn a return or minimize a loss. It's much broader than that.
Got it.
And you know, we're not. Yeah, I think the key thing is here, we want to work with you guys. We want to make this happen as long as it's reasonable for both parties, but we don't. So, you know, I think our asks will be reasonable. It's just hard to give anything precise until we scope out the work in more detail.
Yeah,
So
but I think
our approach is let's divvy it up into chunks. Let's scope the work out correctly and show you what we'll be doing, how much time we'll be spending on it, and what we think it will cost, and then we'll, you know, price accordingly if there's interest for the different bits that we've proposed.
Yeah, I think it's just to highlight, I think it's a little bit different with Kaparki, where they were kind of using like a single AUM maybe number and then doing a management fee from that, as opposed to like, you know, more smaller mandates basically that have their own
Yeah, I don't really get how that would work though, because I mean, like, you have to decide what your benchmark is going to be upfront. So is it going to be DXD, or is it going to be ETH, or is it going to be USD? So I don't know how they plan to make that work in practice. I don't know, you know, and then how are you going to treat impermanent loss? You know, it's never going to be positive. It's only ever going to be negative. So it's all about minimizing it, unless you're, I mean, there's lots of different, you know, things to consider. So I get it. But I would be more, I think it's more sensible for a DAO. If I were giving a mandate, I would be looking at dividing it up into chunks and taking an approach that makes sense for that individual mandate.
Cool. Other questions, thoughts for Avantgarde or anything else? Maybe just quickly touch on, I guess, the process, which I think is still a little feeling it out in terms of how we're kind of coming to this decision, because it's new for DXdao, because we really haven't had this idea of like almost like a company, a stakeholder kind of coming in. Meanwhile, we'd also been looking at individual candidates, and then it also kind of opens up a lot of questions that you guys were talking about. It's like, what exactly does DXdao need? What does it really want? And so I think this is a really good learning process to hear these different kind of groups coming in. We can kind of understand what they can do, but also what DXdao like is interested in. We are meeting after this with Operations Guild to talk a little bit about what maybe the process for this looks like. But I'm hoping in the next week we have like a clear idea. We also have some individual candidates I think would be really great. And even as like Augusto was saying earlier, is this a way to like mix and match different groups? And, you know, again, I think it's about, a lot of this is the DAO. It needs to figure out what it wants to do. And then that can help dictate what the best option is to select there. There's also like, how do we vote on this? Like, you know, it's one thing to onboard contributors. I feel like we have a somewhat okay process for that now, but this is a little bit different doing this. And obviously something like the Treasury is a big deal, and so would want to also involve DXD holders into that. So that will be coming up, hopefully by the end of the week. And then a lot of several people will be in Denver, so it'll be like another opportunity maybe to talk with some people there. But lastly, also worth checking out for this week, there's been more discussion on the DXdao's vision, mission, and strategy. Tomorrow there's a DXD Monetary Policy Committee meeting at 1600 UTC. Tomorrow we'll go over some of the redemptions that happened, the DXD liquidity things. And then we have, yesterday we had a priorities board monthly check-in, lots of good conversation. And yeah, so make sure and check out that video if you have any thoughts. But yeah, I think that's it for now. Thank you, Mona and Aaron, for joining, and thank you everyone for the great questions.
Thanks for having us, guys. Really excited to see how this goes.
Great.
Nice to meet everyone.
Everyone.
See you guys.